The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour, and thanks Tom O'Brien for a great 2 hours. Much appreciated, and of course, great information there. Oh, great information, in fact. When I'm thinking about it here, between bonds and dollar bonds, all that discussion, just that's stuff you just don't read anywhere. That's really good. Thank you, Tom. So straight after me, of course, at 12 o'clock will be Larry Pesavento. A little confused there because I was so intensely looking. Actually, what I was trying to do, I was trying to find in the Boston Globe yesterday, in the Metro section on B4, there was a chart, and I believe it's a daily chart. Yep, a daily chart of the weather pattern from January of last year. And I always do this. I cannot help but do this. Any chart I see, I don't care whether it's, of course, if it's an EKG, that's not going to help you because it goes in between the same parameters. But wherever you can see an oscillation with higher highs or lower lows, I look at that chart, even if it's a chart that only gives you higher highs, higher lows from a 0% base. In other words, it doesn't go to negative, so you don't get troughs going down to below the starting point, say a 0% line. Well, so I signed up for, I get the Globe Daily, but I did sign up for the electronic. I didn't really want the electronic, but I wanted to, because every once in a while there's something that's really kind of important that I'd like to take a picture of as a chart. Well, I count the waves, and I have to. I'm not going to discuss it now because I'm doing it on a piece of print paper. I want to do it in real time, and I'm trying to get to it. For some reason, I wasn't able to get that. I guess the electronic edition would have a different page number. Maybe didn't have the page. Whatever it is, they must have the electronic page here. So I'm going to track it down and see if I can do a wave count on it. But it's just fascinating. Over the years, I usually make a joke about it. But actually, to tell you the truth, I have leg F in the 200-year chart of the global warming. Now, there's no debate about it. There is global warming. The debate has to be how much of it is man-made. So I'm out of this debate. I'm not even going to discuss that. I'm only talking about the chart. But that chart from my National Geographic, I wonder if I've still got it. Why? I kept it, and then I moved it away. Actually, I didn't move it away. It was moved away. And now I don't know where it is. And that's going to be really upsetting if I haven't got that National Geographic. Anyway, I counted on this 200-year chart that we were in leg F. And wouldn't that be an incredible coincidence that if we were making a major top, of course, a 200-year top could mean you could have a 20-year differential between the actual culmination of the top. But wouldn't it be interesting if right now we are in this leg F, just as this incredible worldwide recognition of global warming? It's not a sign. It's irrefutable. There is global warming. The refutable part is how much of it is man-made, and of course there has to be some man-made stuff. Good grief! We're an industrial economy around the world. We're an industrial economy. So anyway, I want to get that chart. And then see if I'm able to actually move it into weeklies and monthlies. In fact, I might call the Globe and ask them where I can get that chart. So Larry Pesavento comes on 12 o'clock till 1. Dave White. You've got Ken Shreve. Ken Shreve, and then you've got Tom O'Brien back in 4 o'clock till 6. The Dow is up 47, down 47 at 13,387. The S&P is down 561. I'm going to talk about all these right now, but I do want to go. No, actually, let me finish up. The NDX is down. The comp index is down 5 at 3,096. We've got. I'll just say that the DAX is down 50, and the UK, London, I think it's the FTSE, is down 23. This is the futures. Gold is at 1648. Silver's up 19 cents. Platinum's down 2, and now copper is down 185 at 367. Just stuck in this range. and you've got crude oil up 15 cents. But most importantly is that bonds are trying to rally here, but it's been very difficult for them. I want to go through that. I want to go through a couple of things just real quickly. We've got callers on the line. I'm just going to say, yes, I will get to the Qs. I was asked about if I would do the QQQ Trust Series, the notation in the ChapmanWave, where we are, what we're doing. I will get to that, but we've got a caller on line who often isn't able to wait too long. Well, let's go to Freeman in Dallas. Hi, Freeman. How are you?
Hey, Baz, how are you doing today?
Very well, thank you.
Hey, I'm trying to short ATW based on the slow stochastic being very high, and I don't know if that's a good idea or not. To look at the one.
I love a question. I love a question when it's answered in the same breath. Okay. First of all, right at an immediate glance, I would say this is absolutely not yet a short. Okay. And I think what you
yeah.
What you did is, Freeman, you made a statement and then contradicted your very own statement, and that statement A, B. So this is E. Oh, this is so interesting. Now, I'm just doing a quick, this is Atwood Oceanics. I don't think I've ever done this. ATW trading at 14.43, up 3 cents. Now, let me just double check. 75, 77. So this is E/C. I'll explain what I'm looking at right now. 84, 86. So that's interesting. So here we are. I'm just doing the notation in the monthly because at first glance, everything's looking strong. So I needed to glance across over at the monthly chart, do a quick ChapmanWave notation of that. And then what I could tell you, okay, I've got it now. And I also like to look at the history of the chart. Wow, what do they do? Oceanics, do they make the equipment or something for drilling or what? Do you know? Whoops. Oh, that's why I wanted to get to Freeman. Sometimes he gets a line that doesn't hold. Okay, Freeman, I'm just going to keep coming. I'm going to talk about this because it's a very interesting stock, and I think I'd like to do a little work on this now, and then I'm going to go to the Qs. So this is a 38.49, so that is correct. That's C. So this is going to be very interesting because I can see that I've got here extension. Folks, I'll be with you in 1 second. D. Oh, I love this. You know, every time I do that, I get kind of thrilled about this. Look at this ChapmanWave notation. The monthly chart from the low that was made in 2003, from the low of $5.82, went to 6 higher peaks based on not only the notation, but it went. It's very important because it looked like the fast-moving average of the MACD was just holding the price up. It's a beautiful thing. The fast-moving average is what basically traces out the price point of whatever instrument you're looking at. And if you're looking at that, it went from the low of that 582 to a high of 29.22, April of 2006. Peak F, the stochastic and everything pulls back. It drops down to 20. Oops, I didn't need that. It drops. Oh. Those up arrows are just stuck to the pointer. It drops to 19.93. And then what happens is it goes to a brand new buy signal and then a buy mode, and look at the on-balance volume. Folks, if you can use these techniques, I believe it really will help you with whatever technique you have. Just add it to your potpourri of techniques. It then rallies to a peak D in the ChapmanWave, 4 peaks high. That's what you usually expect. That's where you can, and don't have to, but that's when you can get the deepest decline. And it goes from 63.46 July of 2008 to the 200-period moving average at $12.60 in December of 2008. It retests it successfully and goes peak A, B, C, D. Now comes in what I'm looking at in so many charts. There's an overlapping wave, but nothing wrong with it because the stochastic's at 80%. The MACD is just barely positive, but the flat MACD continues the last signal, and in this case, the signal has to be a plus sign, which gets upgraded to an up arrow because the stochastic and MACD were all confirming. I suspect this is going to go to $50.19 or higher for leg D, and it could do it this month in January. That's number one. Number two, and I hope you're able to call back, Freeman, but I would not be shorting this. In fact, I'm not saying that I would go long right now. I would like to see just this notation here. The weekly chart is 49.75, 49.77. The way this works out, I was looking at a chart this morning. I wrote it down. Oh, NSC. I'll look at that as well a little later on. I'm going to show you how when things look like they are, it's impossible for it to happen. It suddenly happens with the Chapman wave. So now we've got, no, I would not be shorting this. The stochastic holding at 94%, I believe it is in the daily, is just way too strong. It's just a fantastic way of looking at it, that if the price is holding with the stochastic up in the 90% area, hold off. Don't start doing any shorting until it's at 90.02. So don't start shorting until you start to see the stochastic reverse down with the price. And if 46.98 is taken out, it'll pull back. My suspicion is it's going to try to test just a little higher, 48.71, just another 16 cents or so higher. And if it successfully breaks above that, the real thing is, how does it handle 49.50 to 50.18? 50.18 was the high of the 6th of November. No. Not yet a short. It's one that you might want to put on your list as a possible short. Why? Because I'll tell you right now why. Because the stochastic and MACD in the weekly chart, which is probably what you're also looking at, is not giving you any confirmation yet of the crossover in the MACD to positive, and we have to wait. This is the beginning of the week. We'll have to wait until Friday to see what happens. No. This is not in fact, to tell you the truth, if it had to pull back to 47.70, somewhere around there, and held, and then started to try to rally from there, I'd consider that you could nibble on it for a long position. So no. I could be wrong, because it can turn down real quickly. It's in a retracement failure mode. That just explains that it's underneath the previous peak behind the weekly, but everything about it appears to point higher. So thank you for calling. Let's go to Dan in Baskin Ridge, New Jersey. Hi, Dan. How are you?
Basil, doing well. Thank you.
Good.
Hey, Basil, I wanted to touch base. I know it's not really it's not one of the things Tom likes to trade, but is the VIIX, the VIX index.
Yes.
It just seems to me every time, it gets down around 16, which is well below that, it's 16 seems about like the lower range. And right now we're at all-time lows on the VIIX. And I was just wondering I am long this at 1505, and I wanted to get your take on it.
Okay, that's a really good question. In fact, I spent a little time over the weekend having a good look at the VIX and trying to decipher all the little nuances. Folks, we'll be back with Dan in Baskin Ridge, New Jersey. Straight off this, we're looking at the Velocity Shares VIX Short-Term Index, or ETF. I'll be right back. Dow's down 60.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman, Tiger Technicians Hour, 877-927-6648. And we've got Dan on the line, Dan from Basking Ridge, New Jersey. Hi, Dan. We're back. So, as it stands right now, from what I had shown subscribers this morning and discussed, that there should be some kind of a balance in the volatility index based on my work that says the Dow, not the diamonds made a peak D top in the 120-minute chart. The Dow didn't. It went to peak C. The S&P and the SPY went to peak C. And the Qs, which I'm going to go through in detail in a short while, went to a peak C. And that says, I was thinking that there should be some kind of a pullback this week, but I didn't want to go short any of the indexes just yet. I wanted to see whether or not, because it's historically so important to be looking at how often, especially in the 120-minute chart, as I've shown here, just not hundreds but thousands of times, how often the 120-minute chart goes to a peak D. So I'm suspicious of any pullback here that takes out today's low. I suspect we've made the low, and that we'll rotate through certain stocks to try to get to a nominal new high in the volatility, in the different stocks, which will drag the VIX a little bit lower. But I'm suspicious of what's going on here, only in that a lot of my work says if we rotate sideways here, which is kind of what I think we're going to do. We're going to make the pattern that I call the ChapmanWave stork leg formation, at least in the 120-minute chart. And that says you're going to get a chance to see, what was your entry price?
$15.05. I went in Friday.
So that's pretty good. Where did it go now? Just let me go back here.
It's like 15.01 right now.
Right, okay. So as a person who... You've done this before. Have you done this before on the VIIX?
Yes, sir.
Yeah, so I figured that because you had a certain comfortability in your voice and you kind of, the prayer. Let me tell you something. Historically, I would say if this was a position that you were to hold as a partial position to offset any longs that you have, because there was a chance that we should, even if we make a nominal new high, my suspicion is we're going to come back. We're going to take a little time to digest. I'm talking 2-3 days. Middle of the week is a digestive week coming up. We've started it already. Whether or not the Dow makes that nominal new high in the S&P, I still think we come back into the range. So you are vulnerable to a retest and possibly a slight break of Friday's low of 14.81. But I don't think that we're looking at a huge move here. Yeah, maybe it just breaks out above 1596 to start trying to fill the gap. If I'm correct about this pattern that I talk about, the stork leg formation, let me just tell you what it is. It's a pattern, yes, it is a visual pattern that you can see, but more importantly, it's a psychological, emotional pattern that you will be seeing for a long time, and we've seen it already. That the market has constant upside surprises. Every time it pulls back, it cannot do it for more than a day. Maximum turns out to be 3 days, and then it makes a new recovery high. Every time there is a consolidation, it either closes at a 0% change or unchanged, but very close with a little doji candle, which breaks to the upside. I don't know if that's going to happen. But I'm just telling you that with the volatility index down here, it is buying pressure. That's how I read it. So I'm going to suggest something to you that I don't want to say that it could break to the 1464, 1433 low, but from your voice, I suspect that you're comfortable with a 60 to an 80% stop. Would I be correct in saying that?
Yes, sir. Because to me, it's like, well, I guess this could go down to 9 or 10, but
which it has before,
yeah. But
all right. Now let me give you the trading thing. I'm really looking for you to exit the position because I would personally not be staying in it right now, even though everything about it says, oh man, that volatility index should be going back to the 16, 17 area. If United Technologies and the stocks that I follow very closely are doing so well, I suspect that it's going to be buying pressure that we're looking at. So this is what I would recommend to you. As far as the stop is concerned, I would say you're in at 1508, let's call it 1510. 14.64, 1460, I think it can go down and touch that. My suspicion is it won't go much below 1490 to 1480, and then it's going to rebound, and that rebound will coincide when the market takes a little bit longer to take a breather, and then at 15.60, somewhere around there, I would start raising my stop to break even. And that's how we'll do it. So that's my recommendation for now. You're fine. I wouldn't do anything about it. But 1460 is where I'd be a little careful about letting it go lower. Hope that helps you.
Thanks.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. Basil Chapman here. And actually, I was going to just tell Dan in Basking Ridge, New Jersey, looking at the VIIX, let's follow it. I'll follow it. We'll follow it together. So we'll see how it's doing over the couple of days. So you're in the right position, at least for now. There's just a chance based on my 120-minute charts, which usually come through and somehow or other get to that peak D. That's what we'll be looking for. So that's the risk, but I think the reward will be is if there is a sudden rally, just a nominal new high, and then we start coming down again, whether we take out the low that's made, say, today, or whether that holds, and that's going to be the big issue. Couple of things. I was asked about the NDX. It wasn't the Qs, it was the NDX. Well, turns out that I thought I had done this on the white background chart, but I don't know if I had or hadn't. I can't remember. But I just redid it. The monthly chart, I really have no other way to count it. I know I spent so much time on it when I was looking at it recently. I thought it was on the white background. It must have been on the black background. That seems to have disappeared as well. Boy, I don't think I'm liking this at all. NDX, I'm going to have to somehow... No, there it is. Okay, there. Yeah, I'd spent time on this, and there was no other way that I could count it. There was a peak E in the daily chart, and a peak E in the weekly chart, and that the monthly had pretty much... I really don't have a choice but to put an up arrow here. So I'm going to do that because I've got a down arrow there. I have to be calling this peak C with a really good chance that a peak D will be made above 2878.38, the high of September. Now, that all will change, and I have no idea what the wave count will be because it'll be a failed peak C, and that's a failed peak C. Yeah, it can occur under all-time highs, all-time high. Oh, this is so upsetting. I had every one of these things down, notated. 4816.35, well, almost double, so yeah, 40% higher back in March of 2003. So the story is that, I'm going to go back to the white chart, that the 9-period exponential moving average, which is being covered right now, but it's at 26, around about 2660, that's going to be key. If in January it starts to close below that, then the wick of the candle of November with a low of 2494.38, yeah, and I have to watch that real closely. And a lot, of course, does depend on Apple. Apple's a big weighting, but we've seen before that the market has managed to rally without Apple. But now look at this. Look how many times. Oh, this is really interesting. From the low from the Nasdaq 100. So this is the index, which is the top 100 Nasdaq stocks. From July of 2000, week of the 2nd of July of 2010 at 1700, it went peak A, B, C, D. And then within 2 bars, it broke to a leg E/A. But I don't have to put E/A right now. I can see that it continued higher. But there's a pattern that I've been teaching people for quite some time. It's for those folks who are really, you've gotten pretty darn good at your recognizing the ChapmanWave instant restart. And then what happens is there's something that's very different about what I call the ChapmanWave flat base restart. I suppose after I knocked Basil off the brick after the show. That was that was the next caller. Okay, so this is what we're looking at. There was a pattern that says it broke out above D. That was the high of the 24th, the week of the 24th of December 2010. Pulled back for a moment with an inside bar, and then broke to a new high. But immediately after the peak A pulled back, it went to a peak B and then pulled back all the way almost to the low of the start of that 2206.30. It pulled back to 2188. I have a technique that I call the flat base. It's called the ChapmanWave flat base restart. That's a particular technique that says if after the instant restart there are prices that keep wanting to come back to the starting point, be careful. Why? Because it says when it finally makes a peak D or an E, it's going to come all the way back and probably go underneath the left side low bar. Well, that's exactly what this did. Now, here's the other thing in the technique. If in the instant restart, now it's going above the heads of many of you who have not even learned how to do the instant restart, but I like to talk about techniques that I've developed over the years. If you recognize this, it is a fantastic technique because it says don't go long. Wait for a peak D or an E where the technicals are failing miserably. It's like a rogue wave almost, because when it turns down, it's going to go plummeting back to the starting point and probably break below it. The interesting thing about this, it is the unusual, the unconventional ChapmanWave flat base restart. So now listen to what we've done. I developed a technique, stage 1. As you get more and more comfortable with it, you find there's a slight variation. Well, the variation of the instant restart is the ChapmanWave flat base restart, because it says that you aren't going to go as high as an instant restart, which can sometimes go into 2 new buy modes. It goes to a buy mode and it starts a brand new buy mode that can take you to at least D. In fact, when you get an instant restart, the beauty of this technique is it can take you all the way to E and F, and it very often does that. But when you recognize that it's not going to do that because it's a flat base restart, that says, don't think of going long, think of shorting. Because when you finally get that D or E, and it gives you the sell signal. You put your stop 1 penny above the previous high, and it should come down and take out the left side low. The unusual ChapmanWave instant restart, that is the unconventional one, is a lot more harder to discern. But when you understand the technique, you go to iteration 3. And that says you can break below of D, the low that came after D. Because you really want to use the low. Sometimes I go all the way to the low of C. Now, that sounds really complicated, but like any technique, once you understand the principle involved, it means you've got a construct. You've got something that says, hey, you know what? I know exactly what's going on here. I'm not mystified. So this is going to be very important, that you learn the technique. If you're into the ChapmanWave methodology, email me at basilchapman@tfnn.com if you have any questions at all about the particular technique. But even more important than that is that within the techniques itself, when it produces this pattern, it suddenly turns around and it goes back again, and it can sometimes go even higher. Now that's going to be very important. So I'm looking at this and I'm saying, aha, it pulled back after that peak E at July of 2011 at 2432. It comes all the way down to the 2034 low of August, the week of the 12th of August 2011. Then it walks the 9-period moving average, that beautiful blue line. It goes to peak D on the week of March the 30th of 2012, turns around, and then it makes a double top with another very quick A to B to C to D. Now, what's very important and what I love about my headphones that I've got is that I can move around, I can do all sorts of things. I have no idea if anybody can tell me why we still have in this day and age that very costly service of that big beep that goes on as a public service announcement to say, be careful, be careful. They have this warning sound. What the heck is that all about? When a split second, you can actually get the video of whatever the heck is happening. So that's what happened right now. They have that instant, that sound. That's what I had to get rid of. So we're in a trading range. I'm going to draw the rectangle formation. So the big question on the NDX 100 is, where are we going? And I can tell you right now, it's very clear. It's very clear. We are going to trade between the low of, 2443 was the low of the week of the 8th of June of last year. I don't think that's the issue. The low of 2494 is the low that we have to watch for. But everything about this says there's a real good chance it's gone peak A to peak B to peak C. There's going to be a real quick D going a little higher than 2750, but the high of 2878, that's going to be the boundary line that says maybe you go slightly higher or slightly lower, but you're stuck in a rectangle formation, and that's all about Apple. So looking at the monthly chart, it says, you know what? We can just squeak to a leg D as the Remember, folks, a rotational market is what has happened constantly through all corrections that we've had since the March 2009 low. So be careful about jumping in thinking that it's all over. I know you can read a lot of reports that say, oh, it's all over, it's all over. My work says there's a real good chance that we're going to go higher for the next 4 weeks, maybe 6 weeks or so, and it's going to be rotational. And that means the NDX 100 is giving you parameters 2,660 area is major support in the 9-period moving average. I can see the stochastic and MACD pulling back as the price struggles to move higher, but it's not the index du jour. That index is probably the one we're going to talk about right now with Neil in Denver. Hi, Neil. How are you?
Good, Basil. How are you?
I'm very well, thank you.
I did want to just check with you. I've seen, and everyone else has as well, a huge extension on the XLF over the last couple of months, perhaps for the entire year 2012, and continues to steam higher, obviously, on expected higher earnings this quarter or from last quarter. But it looks to me like we're pretty extended, and I wanted to get your take on it.
Okay, that's a great question. So, folks, we're looking at the XLF, and I just need to do this for 1 second. Got all these Fibonacci. The only thing about Fibonacci extension lines that I use is that it makes everything messy. I like it, but it's messy. So I tend to look at them, and I imprint in my mind the exact level, and then I say, okay, that's it. You had your fun. So this is what I'm going to do. Folks, we're looking at the XLF. You're looking at my charts. If you're looking at Tiger 1, and I'm archived on Tiger 11, so if you want to see the show later on, we've got the pattern that I've been discussing for a while. It is the inverted. It's actually the reversed handle and cup instead of cup and handle. And it made from 16.44 at peak E in the ChapmanWave on the 14th of September. It pulled back, made a cup formation, went down to 1545. They made a cup formation at peak E, peak A, B, C, and then it went to D at 16.39, below the previous high. Then it made a much larger cup by touching the 15.08 level of the 200-period exponential moving average, and it went to peak A, B, C, D, and that D stopped on the 5th of December at 1593, pulled back with an inside day for 1 day, and then broke out to the upside. That's just like the pattern I was looking at on the NDX 100. Well, that starts a pattern that I call the instant restart. And what you do is you have a parallel wave count. So the first one, let me just change that. First one is E. Let me just type it in so you can see what I'm doing here. Are you in this, or is it just more as a measure of other things that you're talking about it?
No, I'm actually short the FAS based on some puts, and I'm thinking about adding to the position. Just a very small opening position that I put on as of Friday, and as I say, I think this is, at least for me, if you confirm what I'm looking at, it just looks way overextended and ripe for a little fall. So,
okay, so the puts are January puts?
No, actually, I'm going out to April. I want to catch the second or third fiscal cliff activity.
Okay, completely different scenario. Okay, it's what?
I'm buying deep in the money puts.
Okay, deep in the money puts. So you basically are hoping that if there is a pullback, let's call it pullback, you're looking for a sharp decline, you're going to be moving about 75, then 85, then almost 98% with the price of the decline as it goes down.
90, yeah. Mm-hmm.
Yeah. So if you had different ones, if you were actually out the money, way out, if you had the something like the 15s, then of course we're talking a different kettle of fish. So I can comfortably talk to you now about the whole thing because we're not in a rush. You know what you're looking for. I must say I'm kind of in agreement with your thinking, but my suspicion is you're a little early in the strategy. So keep that in mind. It's not like the end result. The end result is really what we're talking about. Are we going to, in the next 2.5 months, are we going to see a really sharp decline? So I'm going to do this. We've got a little break coming up. I'd like to spend some time on the XLF because I did some work. Was it on this one? Yes, I want to do this because I've done some work on the different stocks within it, and we can just talk about it, and then we'll talk about what we can expect based on the monthly chart of the XLF. Folks, the XLF is S&P Select Financial Spider Fund. I'll be right back.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi, folks. Basil Chapman. I just found this right now. It's with a black background. Let me just change the color here. This is the pattern that I was talking about earlier about the ChapmanWave Stork Lake Formation. If you look at the XLF monthly from the low of where it dropped 83% down to $5.88 to the March low, February low. No, that was March. And what happened was it went up almost in a straight line to the to leg B at 50, peak B at 50.76. Then it pulled back and went to 17.12, and that made an oval formation. And then what happens is it breaks above, and it's formed the neck, and that turns into the neck and the head and the beak. And that goes to 17.20, and then it pulls back. And very often what happens is it breaks below the trough, the most important trough. In this case, it was the trough of $13.34. That was the oval body. And then it goes back up again. This is the beauty of this particular pattern. So we're looking at leg C starting in the monthly chart. So basically what we'll be looking at here is that Neil would be wanting to trade. He's already in a put position, a starter position, and he's looking to trade a sudden sharp pullback, maybe a 15.73, the 9-period exponential moving average, or maybe it breaks lower if it does do that. So then I said to myself, all right, let's just go to the weekly chart and see what's happening there. And the weekly chart, now this is very interesting, because in the weekly chart there's been this big cup and handle formation, which says it's one of my least favorite, because when it's really not a formal one, because the left side I made up where the cup lip is at 15.70. What happens is it breaks above and it invariably comes back and tests the cup inside, which it did. So now the question is, in the weekly chart, is this E to F, or is this a brand new A to B? So when I look at this in the weekly chart, let me just get rid of this. I have it on a weekly basis with the white background and look at the 200-period moving average, that orange line. So from the time it broke down back in the week of the 14th of December 2007, this is the first time that it's been able to break above and hold above the 200-period exponential moving average. That's now like a magnet line, around about $16, and I'd say $16.28 is being covered right now. I can't see where it is. So at this point, I would have to say that I'm waiting to see if the daily chart is able to get to this leg D, because I've got the alternate wave count, which says in C right now, A, B, up C, and it should go to a D, and that should be even just 1 penny above 17.08, and then we'll see. But right now it's an inside bar. I see a lot of support, so I'm going to make a recommendation. I would not add to that position. I'd wait to see, because the 200-period moving average in the weekly chart, around about $16.21, that is like a magnet, and it says that at some point fairly soon there should be some kind of retest of the 9-period moving average of 16.34, and if it does that 200-period moving average, we're going to see whether it's becoming a propellant or a magnet to say, you know what, you're coming back to me and you're going to go a bit lower. So I believe in this particular area, which is one of the stronger areas, if you had to look at the different stocks, like Bank of America needs leg D. I think it made it today. Yep, it made leg D. So now it's completing at least a short-term move to the upside. So I think you're in a good position to make some money. I don't know yet, because we have to see how the next couple of weeks unfolds. But my suspicion is that it's a little later on, maybe in February, maybe March, that you really get the sharp pullback, and then you'll be ready for that. But where it comes from is going to be the issue. So, Neil, let's look at this together. You're in the position. I wouldn't add to it right now. Let's look at it again maybe Wednesday or Thursday. Is that okay?
That'd be great, sure. Appreciate you looking at it.
Thank you so much, Neil. Neil in Denver, Basil Chapman, and signing off, giving it over to Larry Pesavento.